Hey traders, it is Sunday evening, April the 18th, 2021. Time for a weekly update on our asymmetric trading system results. Well, we start off and let's take a look at the marketplace. I don't know if anybody is having a hard time deciphering what the trend in the marketplace is right now, but it's pretty clear. It's pretty clear that it's up, 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 up. Now, again, we're here Sunday night. We've got the futures opening up a little weak, obviously, since we've hit another all-time high in the marketplace. But nevertheless, we're at all-time highs once again, guys. And we've talked about this before in our portfolio analyses. Our dual mandate in our asymmetric system is not just A, to beat the overall market with returns, but B, do it at less risk, less volatility. And we've been marking at about 42% less overall volatility. A lot of that comes from our bracket orders. A lot of that comes from the cash flow that we get on our covered call portions of our trade. A lot of it comes from trading core positions that are non-correlated with the overall market. So all of those combine to help us get to almost half of the volatility of the marketplace. But you understand the challenge that presents when you have a runaway train like the market has been lately. It's hard enough to keep pace with the market when it is just off to the races like this. When you are taking less risk than the market, not more, it is a Herculean task to try to beat this market. But I'm really, really happy with our results this last week that we went through. So quick update on our results, and then we'll get into our current overall portfolio heading into Monday, talk about our open positions and what we're looking at with them. So for the week of April 12th through April 18th, the stock market, meaning the S&P 500, which is what we measure against, was up 1.37%. They had 2 winning days and 2 losing days in that scenario. Okay, so up 1.37%. We were up, drum roll please, we were up 2.11%. So we absolutely trounced the marketplace. I had not looked at what our winning versus losing days was. Winner. We did not have a single losing day. So all 5 of our days were winners for last week's trading. And again, pretty darn hard to do, but guys, I am just absolutely thrilled with the performance of our portfolio. Not only besting the market by almost 100%, better rate of return, but doing it at about 42% less fees. I started the week with my portfolio at 31. Well, let's take a look at it. We can look at it right here. I started the week with about $34,197 in valuation. Finished the week with $34,900 and I think 21. My handwriting's horrible. $724 profit on the week for a 2.11% rate of return. So it is impossible, guys. It is absolutely impossible to be any more thrilled with what we did last week than what we did do last week. Just absolutely gangbusters. Got a couple of positions here going in still open and working going into Monday, April the 19th open. And let's go through those. So we added a new position to our core portfolio last week with the VIX and 300 shares. Now the VIX is going to do, this is so nobody gets freaked out this week. Everybody is aware of this. The VIX is going to do a 4-for-1 reverse split. Okay, so your shares are going to contract, our options are going to change, the pricing is going to change. None of that matters from a P&L standpoint, okay? The pricing is going to change just like a normal split. You guys are used to splits before. This is a 4-to-1 reverse split to take care of some of that contango that eats away at these positions. We'll talk about that a little bit more in the chat room if you guys want to get a discussion going on that this week. But nothing that is going to affect our P&L, but it will affect our position in terms of wanting to resize for future cash flow opportunities. But we obviously have the VIX in place. The VIX, of course, makes money when stocks go down, and it is obviously at a crushingly low level right now because stocks have done nothing but go up. But we are cash flowing it here, and we still have $57 of cash flow sitting in that. So I'm still okay with that position. Our USO is a core position as well. Now, if you look at oil, you can see that oil is actually starting to top off a little bit here. We're starting, just barely starting right now, to get some sell signals in our oil position. The good thing about that is that, guys, we are protected all the way down to 42.50. Oil right now, 43.18. We're protected all the way down to 42.50. And we've still got 12 days left to go in that. $75 of extrinsic cash flow still sitting in that position. So this is where we get to that 42% less risk, even if oil comes down. We're protected on that trade all the way down to 42.50. So we'll continue to watch that as the market progresses. UPN is a non-core position. It is a bracketed order where we're exiting at a 1% loss or a 3% profit. Hasn't really started to work for us yet. Just put that on, I believe, on Friday. And so it's still in the portfolio, still working. UPN, you can see that it's trying to push higher. It's trying to push higher here. And so we'll continue to hold that one going into tomorrow's open. Our core position in the SPY couldn't be any safer, really. It could not be any safer. We've got we're covered on this position at the 408 level, and the market right now is 417. So the market goes up, we're okay on this. The market stays the same, we're okay on this. Market drops all the way to 408. We're still going to bank our profits on this trade. Just a very, very small $10 worth of extrinsic value. We've talked about this before. When our covered positions get too safe, the income from them starts to really dwindle. And we want to try to bring in at least $100 a month per contract, or excuse me, $100 per week per contract on the SPY anchor position. So we're going to need to probably adjust that this week unless the market gives us a nice little present and goes down. Our SLV trade is looking really, really solid as well. We're covered at 24.50. The market right now is 24.09. So we do have a little bit of the best of both worlds here. We've got some appreciation potential still left in our SLV trade, plus $64 of extrinsic value or cash flow sitting in there. So really, really excited about that. Our RWM, guys, I'm very, 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 very I'm sitting on pins and needles waiting for the market to go down, because as you know, and again, we've looked at this, right? The S&P 500 just marching higher, higher, higher. But the Russell, the IWM, not really the case. As the overall market's been pushing higher and higher, we're you know, it's not a downward move by any means. We're not going down on the Russell, but we're not going up either. There is a lot of weakness in there, and it is interesting. Again, on a decent day on Friday, the Russell was down. The Russell was down. You can see the S&P was up nicely. Russell was down. And so we're going to continue to hold this. We've got a lot of appreciation potential in this. We're covered at 23 and we're at 21.65 now, so a lot of room for that to run. Our IYR position, our real estate position, giving us a lot of diversification in our trade, and it looks, guys, every day from a technical standpoint, it looks tired. It looks overbought. It looks like it's ready to correct and come back down. And it just kind of keeps trudging higher and higher. Now we're going to keep our eye on this one, but again, we've got a little bit of protection on the downside with this. We've got the 95.50 calls that we have sold and cash flowed against this. It's at 96 right now, so it could actually come down quite a bit. I say quite a bit. It could come down a point or so and still have the protection of locking in our profit that we currently have. Plus, we got $65 of extrinsic value still sitting in that position. I've got my Duke position. That is a non-core position. 31 shares there. We are bracket ordering that. Duke's working. Duke's working. So you can see right here, if we look at these just a little more carefully, you can see that we've got there is the white line is our position. That's where we bought in at. The green line right here is my 1% stop loss, and my green line, those are yellow, right? My yellow line down here was 1% stop loss. My yellow line up here is a 3% take profit. We're getting very close on Duke to cashing out at a very nice profit. Cat is kind of the same situation, non-core position. We've got a bracket order in on that, 13 shares. And you can see sort of a similar situation there. We need a little bit more help with Cat than we do with Duke, but it's trying. It's trying to push up there to that level and get us out at a nice profit. So these are our carryover positions going into Monday. We have 1, 2, 3, 4, 5, 6 now. 6 core positions, and 1, 2, 3 non-core positions. So we will probably only add 1 or 2 positions to our portfolio on Monday. But guys, what I'm really excited about here is looking for some kind of a market pullback. If we could get a market pullback, that would be tremendous for us. We had one day in, not this last week, but the previous week, where the market went down like 1.3% in the day and we were up 1.3%. Those are the days that we need to really start extrapolating our lead over the marketplace. If we can have days where the market goes down 1%, we go up 1%, and it's a 2% swing, that's huge for our performance numbers. So waiting patiently for a market downturn here. But I think we're very well positioned going into Monday, guys. Again, if you are interested in looking at our asymmetric trading system, we do have a 2-week free trial that you can take a look at. I will put a link in the description below. And as always, thank you guys so much for watching. If you find value in these videos, please click the like button and make sure to subscribe and turn on your notifications so that you get notified when a new video is posted, and so that you don't miss anything. And leave a comment. I try to answer all of those. Thanks, guys. We'll talk to you soon.